Hello and welcome to the November edition of the Corporate ESG 5in5 podcast, the podcast in which we spend 5 minutes exploring key ESG trends set to shape the market this month. I'm Isabella Crack from the ESG advisory team here at NatWest, and I'll be taking you through this month's key highlights from COP16, putting ESG front and center. Let's begin. The UN Conference on Biodiversity, COP16, was held in Cali, Colombia from the 21st of October to the 1st of November. This COP attracted significant interest from the private sector, with many corporates in attendance, hitting a record high with 14,000 registered delegates. This demonstrates the accelerated pace at which biodiversity and nature has taken its place as a material issue for many companies, highlighting the need for robust policy frameworks and multi-stakeholder collaboration to direct finance towards biodiversity goals. Here's a summary of 5 of the key takeaways from the summit. First, there was mixed progress on meeting global commitments. COP16 highlighted the Kunming-Montreal Global Biodiversity Framework as essential for tackling climate change, biodiversity loss, and pollution, with calls for strong national action plans and funding. 115 countries have set targets, but current protection levels, 17.6% for land and 8.4% for marine, fall short of the 30 by 30 goal to protect 30% of land and sea by 2030. More than 190 countries have committed to designating 30% of land and sea as protected areas by 2030, which will require advanced monitoring and verification systems. Number 2, there was no agreement on a global fund to aid poorer nations in restoring nature. This caused tensions between the global north and south. Talks on raising $200 billion annually for conservation, including $30 billion from wealthier nations, stalled as focus shifted to private funding. An additional $163 million was pledged to the Global Biodiversity Framework Fund, established at COP15, to support the Kunming-Montreal Global Biodiversity Framework. Despite new pledges from 12 contributing countries, the total fund now stands at approximately $400 million, which is still well below the required amount for significant progress. Number 3, the growing role of finance for biodiversity. COP16 emphasized the finance sector's responsibility in turning biodiversity commitments into tangible outcomes. Key initiatives introduced at COP16 included frameworks for biodiversity offsets, nature-based solutions incubators, and scaling conservation finance through mechanisms like debt for nature swaps, with early-stage efforts growing in scope. Whilst the market for biodiversity financial products, such as debt for nature swaps and biodiversity credits, is still in its early stages, with limited targeted funds, around $4 billion, the sector is expanding as banks and organizations launch new instruments to support nature conservation. Number 4, investor spotlight. A coalition of investors managing approximately $2.5 trillion in assets urged governments to take bold steps to address biodiversity loss, including setting ambitious national targets, implementing mandatory nature disclosures, and developing financial mechanisms for nature. Alongside this, the Nature Action 100 initiative released its first benchmark assessments, revealing that most of the 100 participating corporates are in the early stages of addressing nature-related risks, underscoring the need for more urgent action to mitigate financial risks from biodiversity loss. And finally, corporates taking action. Alongside the Task Force for Nature-Related Financial Disclosures release of draft guidance on nature transition plans, more than 500 companies have now pledged to commence with nature-related financial disclosures, a 57% increase since January 2024. This movement reflects a growing acknowledgement of nature's importance in managing business risks and opportunities, with $17.7 trillion in assets under management now aligned with TNFD reporting. Attention is now on Baku for COP29, and we look forward to following developments closely. Thanks for listening to this month's Corporate ESG 5in5. I hope you found it useful. As always, please be sure to check out our monthly newsletter, LinkedIn, for more on the key ESG trends shaping the market this month. And if you like this episode, please follow the channel and click the notification bell so you can get future episodes as soon as they are released. Thanks again, and see you next time.